Hello, and welcome to LeaseQuery Accountant's Angle Podcast, a podcast where our experts will answer your most burning questions related to various accounting topics and upcoming pronouncement changes. I'm your host today, Jason Parker. I am a Senior Alliance Manager here at LeaseQuery, and today I am very excited to be joined by Donie, who does quite a bit with Sage Fixed Assets. Her role is both product owner and development manager. And today we're going to talk quite a bit about overall asset management and specifically some aspects related to Sage Fixed Assets. So Anne, very excited to have you and welcome to the show.
Thank you, Jason. I'm excited to be here.
Awesome. So we can go ahead and dive right into the content that our listeners have been craving for. So when we think about tracking a company's fixed asset listing, what would be the reasons, if we just start very basic, why is it important for companies to make sure that they have a handle on that information?
Sure, Jason. There are several reasons. Studies have shown, studies of companies that have actually done the physical inventory that haven't been regularly doing it, they find that somewhere between 7 to 30% of their assets can't be located. So that's assets that are on their fixed asset register or subledger, as you might want to call it. Those in the trade are often called ghost assets because they're on the ledger, but they don't physically exist. Conversely, you also have zombie assets, which are assets that physically exist in your company, but they're not on your fixed asset register. That's not as big of a deal, but it still can happen because maybe it was expensed when it was purchased instead of capitalized like it should have been. But assets, and also the other third thing is assets that may be found but are no longer in use. So maybe that's a new term. Maybe we should call those dead assets, but not yet properly disposed of. So these assets that are on your books that no longer exist, if they're not fully depreciated, you're going to save real tax dollars by doing that physical inventory of them and realizing they're no longer physically existing and writing them off your books. Because if they're not fully depreciated, you're going to immediately save in federal and state income taxes by reducing your taxable income. And another aspect is personal property tax. Let's face it, personal property tax I know is charged almost by every county in the U.S. for tangible personal property, desk, and everything. And that's by your self-reported cost and acquisition year of those assets. So even though the carrying value might not be on your balance sheet, if you're still self-reporting it as you own it and you don't, you're paying too much in personal property, tangible property tax. Leased assets, of course, I've been mostly talking about owned assets, but leased assets, which LeaseQuery is all about, are now on the balance sheet too as right-of-use assets. And it's very logical. You need to track those, of course, to avoid any penalties or fees from the lessor when it comes time to return them. If you can't find them to return them, I'm sure there's clauses in there for buyout options and who wants to buy an asset that you can no longer locate. Lastly, I'll just mention the compliance obligation. The CFO and the CEO of audited companies must personally attest to the financial statements accuracy when their financial statements are audited and that opinion is issued. That includes the balance sheet value of owned and now right-of-use leased assets. That can be a large number.
Yeah, that's extremely helpful. I think it's vastly interesting that organizations can actually save themselves money by spending time identifying some of these assets that they may not be aware of, which to that extent, the volume of assets you mentioned is quite extraordinary. And one of the things I was going to ask, which you've even answered already, is just what types of assets might people need to think about inventorying. So if we actually just skip to the physical inventory event itself, what would you consider some best practices worth sharing to our audience, just in regards to, hey, making sure that you obtain that complete physical inventory?
Sure. The first thing really is to label all your assets with a scannable tag, a barcode tag or QR code tag with that number that you can identify as uniquely that asset. So if your assets aren't currently barcode tagged, that's okay. You can, your first inventory can include that process of barcode tagging them. But get in the practice of putting on a permanent weather-resistant tag. Consider having the receiving department tagging the assets as they arrive into the shipping department, and then forward the tag number to accounting. That's, of course, is the crucial thing, is getting the accounting department the correct knowledge. So the accounting department is not going to need to have a subledger of all the assets that ties out to the balance sheet. But you should also track assets that may be below your capitalization threshold, such as computers and tablets, because they can add up to significant expense if they're stolen or misappropriated. A sticker that says property of XYZ company and with a number on it is a good deterrent. But more importantly, it's just the simplest way for people in operations, your employees, to report it if they do need to replace an asset and tell you that, hey, this one is no longer working, we're going to junk it. Here's the number. Then accounting can just search on that number, that tag number, and find the right asset to dispose from the records. So yeah, on your subledger, you need to have that tag number, as well as the location and owner, caretaker of the asset, whether it be a person or a division, and other identifying details such as serial number, date acquired, vendor. You can even take photos, of course, and add them to the inventory. So when someone goes out to do the inventory, they know what they're looking for. So the first step would then be to create that list of assets to be inventoried, probably by physical location. Break it down by physical location and provide the list to the people who will be doing the inventory. You can do it very manually, paper and pencil, or use some technology and at least have Excel on your smartphone or something and find the asset tag and check off the list and get that back to accounting. Or you can use a purpose-built solution such as Stage Fix Assets Tracking. That our tracking module allows you to upload the list to a mobile device and like a tablet or a phone, and use the phone's camera to scan the tags. And then it finds it in the asset listing, and you can make any changes such as location or condition that are needed and save it. Either way, once complete, reconcile those lists back to your master list and write off the assets that were determined to be lost or no longer in service.
Very detailed answer. And I will say that does sound like quite the burden on a large organization. So if we think about just getting started, I imagine organizations that haven't done a good job of this might feel a little overwhelmed. How would you suggest that they go about putting a proper plan in place? I know you went through just now a lot of what they can do to complete that inventory, but how would you say, as you prep to get this done, what are the most important things to think about?
You can certainly break it out over time. It's not like an inventory of your resale inventory, right, that you're holding for sale. Typically, the assets don't move around too much. So to break down what can be a very large process, depending on how many assets you do have, you can break it down by location and start maybe with the higher value assets. Let's just say, hey, for this year, we're just going to confirm these higher value ones. We'll go in more detail later in a future year. So break it down to make it manageable for your team. And then if you don't have the bandwidth and or just want to get it all done right away, you can do it all at once. And there are companies out there that will provide that service for you to reconcile your asset inventory and even help you get set up with a tracking system and add the tags for you and get it all computerized if you don't have a computerized system. Which reminds me, there's also a lot of those companies are specialists and they do cost segregation. I don't know if you're familiar with that, but when it comes to income tax reporting, if you have like a building that you've built, it's either depreciated by tax rules over 27.5 or 39 years for real property. Often those buildings get capitalized that way, millions of dollars just with that long life. But technically, and the IRS recognizes this, many components of it, like carpeting, flooring, custom lighting, are personal property that can be reclassified to a 5 or 15-year life. That even includes landscaping. So if you do that type of study and reclass those assets, you can also save a lot of tax dollars in that first year when you adjust the life of those assets. I know some companies have saved millions of taxes in a year.
Yeah. Yeah. I will say back when I took intermediate tax at the University of Georgia, I would probably hope to say I was familiar with the various depreciation lives available in these situations. But I'm glad that I have you on the call here today to give a little bit more detailed background. So that's very helpful. Obviously, getting the initial cleanup of all of this data available for use for the business. When we think about the reoccurring aspect of taking inventory, what do you think the suggestion should be for organizations and how often this should be done?
Yeah, good question. And it really will be, it depends on the number of your assets, your organization, your assets characteristics. For 1 to 3 years is common. Some might not do it, but maybe every 5 years. Certainly something to talk to your auditors about, what's reasonable with them. And practically speaking, it's better to build it into like a rotating periodic process, maybe each quarter doing a portion, a location, some way you can segment your assets just to get it done again in smaller batches and keep people kind of in the habit of doing it and setting aside some time.
No, that makes 100% sense. And so as we kind of move towards the end of the conversation today, I figure it might make sense to just open it up to you in more of a free form sense. I mean, are there any other recommendations that you want to provide the audience today, just in regards to overall asset management?
Sure. When I speak to customers about their fixed asset management and accounting needs, the biggest thing is often, how do I get people to report to me that something's been purchased or moved or transferred or abandoned and sold from the rest of the business? And I come from an accounting background too, so I totally sympathize. So if you haven't thought about it yet, there's so much technology out there, set up some kind of simple process and just make people in your organization aware that, who to email or where to go to some smart sheet or whatever to report, hey, this asset tag, we're moving it to this other location or it's being disposed. Just make it easy for them, because their last thought is accounting, of course, and then accounting gets frustrated if they don't have the facts they need to record things. If you keep it clean from a daily, monthly basis, it'll be smoother when you do that inventory.
Yeah, absolutely. And we very much thank you for joining us today. I figure before we click the sign off button, why not spend this time plugging the Sage Fixed Assets suite of asset management solutions? Obviously, you all are a very valued partner of LeaseQuery. We feel like as a unit, we provide that overall asset management, LeaseQuery obviously providing the lease aspect. But where can listeners identify more information about the Sage Fixed Asset suite of products that you're involved in?
Sure. We do have a great partnership and I appreciate it. So you can go to sage.com and there's either you go to over to the products under sage.com and find Sage Fixed Assets, or use the search icon in the upper right corner and type in Sage Fixed Assets. That's going to take you to the Fixed Assets landing page where it goes into details and even a ROI calculator that talks about ghosting assets and zombie assets, and you can calculate how much you might be able to recover by doing that type of inventory. So we have 3 modules: depreciation, tracking, which is what we've been talking about with the barcode scanning, and a planning, which is like construction in progress package. So thank you for letting me share that, and I appreciated talking to you today, Jason.
Absolutely. You brought quite the level of detail for our audience today. So thank you, Anne, again for joining us. And for those of you who are tuned in, thank you for joining LeaseQuery's Accountant's Angle podcast. We will be coming out with more episodes soon. So if you would like those episodes sent directly to your inbox upon the production of them, feel free to subscribe to LeaseQuery's Accountant's Angle podcast. Otherwise, we will see all of you next episode.